Welcome to Just 2 Minutes. I'm your host, Kamil Sarji, the broker-owner of Gold Door Realty in North Smithfield, Rhode Island. And I have David Frankel here today from Annie Mac.
Annie Mac Home Mortgage, Annie Mac, we got your back.
Oh, I like that. Yeah. I should have one for Gold Door. Gold Door, don't stare at...
Who needs more?
Gold Doors, yeah. All right, I gotta
Gold Door,
work
who
on
needs
that.
more? Gold Door, hardwood floor.
Yeah, we're your door, not your floor.
When you need more, go to Gold Door.
Check out Gold Door.
Yeah.
All right, so just 2 minutes. It's not the whole show is just 2 minutes. It's
okay.
Because everybody's like, just 2 minutes. It's longer than 2 minutes. How can you get your point across, and how can I interview you in 2 minutes? Mm-hmm. You know, so just 2 minutes is basically me asking random questions for 2 minutes. That's it, just for 2 minutes.
Okay.
We don't end the show after that.
Oh, all right.
We keep talking about other stuff, serious stuff.
So it's like two. It's like you get the lightning round, 2 minute lightning round, and then, whew.
Yeah.
Okay, we're done.
That was
stressful. That was hard.
Yeah.
Now we talk.
Yeah.
Okay, got it.
It's cool how it's designed.
I like it.
So I'll put this here so we can see it.
Okay.
And then, all right.
Ready.
All right.
Go.
Have you ever donated blood?
I have.
Nice.
Yeah.
Would you donate blood to me?
I would.
Okay. 4 ounces?
Sure.
Like if I, just to have, not to, for my body, like just to have, and say I have like 4 ounces of blood?
Sure.
Okay, awesome.
Yeah.
If you were to save one thing in a fire from your house, what would you save?
Children.
One thing. Of course, the children ran out.
Okay, they're gone. They're safe. The kids are safe. Wife.
Yeah. That's the thing?
She's good. Yeah.
Yeah. Oh, no, pick one.
Like an object.
Object, yeah.
My piano.
Okay.
It's heavy.
Are you an early person or a late night person?
I'm both.
Awesome.
Yeah.
That's what I am. And I had that written. I'm like, very cool. Okay. Do you believe that dreams have hidden messages?
Sometimes.
Okay. What's a word of wisdom that you can give me?
Eat.
Eat what?
It's just one word. You want a sentence?
Oh, sorry. Words of wisdom.
Okay. Don't mistake activity or movement for progress.
Damn, that's deep.
Yeah. Denzel. Thank you.
What's your favorite superstition?
Say your name 3 times is a jinx and you can't talk.
Okay.
That's not really a superstition.
Okay, if you walked under a ladder.
Walking under a ladder.
If you walked under the ladder.
Black cat crossing the path. No.
Is it
no, you know what? Don't break a mirror.
Wow.
Are there more we can do? Because this is a lot of fun, actually.
Oh, no, that's it. You got to come back again another time and we'll do another episode. But for now, wow.
Eat.
What'd you think?
I love it. I think it's great.
Yeah,
It's
adrenaline's
fun.
pumping. And
Oh, I'm fired up. Yeah, it's fun.
now it's time to relax and chill and talk about real estate. So speaking of real estate, Annie Mac, I like that.
Yeah.
Is that something they came up with or you came up with?
No, I came up with it. It just sort of made sense to me. And I asked someone about it. They're like, yeah, sure. I guess you could say that. It's not like an official slogan.
Dude,
but
marketing genius.
I like it. Annie Mac, we got your back.
Beautiful.
Pretty simple.
So as a real estate agent, we know a lot of lenders, obviously, because the way for lenders to get a lot of the business is working with realtors. Obviously, realtors are the first stop. So many lenders, so many different products that they have. And in this market, it's crazy because, you know, I've seen it a lot. We're putting in offers and they don't get our offer. And I check in with the agent like, hey, how come you didn't pick our offer? How could we do better? And they say, that's a cash offer. So all these people with cash offers are coming in and just like sweeping up everything.
Yeah.
It's a first. For me, I'm picking a cash offer. I present the offers to the seller.
Yeah.
And then the seller, you know, we talk about it and we end up getting the cash offer because it's like, it's perfect.
Yeah.
So unless I'm going with a hard money lender or unless I have 500,000 in my pocket, I'm going to go for that. So what are things that someone could do to be able to get that home?
Well, it's funny you should ask. One of the reasons I joined Annie Mac is because they have a solution to that problem. We have a solution to that problem. Buyers are getting fatigued. Buyers are getting tired of competing in a market that they cannot compete in. Cash offers, it's just it's a benchmark. 33% of transactions nationwide are cash transactions. And so everyone else, you put an interest rate and inventory, these issues that are facing buyers today with this so much demand and so few houses to choose from, that buyers just don't, it's hard to compete. There's so many people out there, and there's those offers that have cash, they're at the top of the list. So we have a program that allows buyers who aren't all cash to make a cash offer on the property. And so now, this is for a buyer or a seller. If you're buying, you can make a cash offer as a purchaser. If you're selling, you can make a cash offer as a purchaser on your new home, and you don't have a mortgage contingency or a suitable housing contingency on the departing property.
Okay, I want to talk about sellers in a second,
Yeah.
but let's focus on the buyers.
Yes.
So you said you have a program where the buyer can go in and offer cash.
The buyer can go in and make a cash offer. Our program, we guarantee the purchase. So we sign a contract. You get an addendum to the contract that gets submitted with the offer. Annie Mac and its partner company, Cash to Keys Private Equity, are guaranteeing the purchase of the property on a date. Something happens, the buyer, loses their job, financing falls through. There's no mortgage contingency. We're buying that house. So the seller, it's even better to me. It's even better than a cash offer because we're guaranteeing the purchase. Cash offer, the buyer can flake. Just like any, right? So this is even beyond, not only is it cash, but it's also guaranteed. So I think that makes it very competitive.
Okay, so let's go through the process from the beginning. Someone comes in, applies.
Yeah.
Same approval process?
Same approval process.
Okay. You give them a proof of funds?
We give them proof of funds. So the Cash to Keys private equity company has many, many millions of dollars in the bank.
Yeah.
I think it's a big number.
I like them. I like them.
I like them too.
That sounds nice.
Yeah,
a lot
it's
of money
great.
in the bank.
They have a lot of money in the bank, and so you get the offer letter that goes with the contract shows the proof of funds shows this big bank account. So you get the proof of funds with this multi-million-dollar bank account from a private equity company that's guaranteeing the purchase. So it's buyer can't just say, oh, I don't like the paint color. Oh, there's 2 steps instead of 3 at the entrance. I don't like it. We're buying the house. It's a guarantee for the seller. So it's really, I think,
powerful.
It's powerful. It's compelling.
Oh my gosh.
Yeah. And there's no extra charge to rate. There's no extra cost to it. I mean, there are rules, there are ways that we have to structure the contract, and there's some parameters, but there's no extra cost.
So they're giving the proof of funds for this specific house that they put an offer on.
Yes.
It's not multiple, like any house, go out there, any house you want, you can put offers on.
Any house that works.
Who verifies if it works?
I verify it as a loan officer. I'll run the numbers. I'll look at the taxes, look at the insurance, and do the PITI, principal, interest, taxes, insurance. I'll do the math to make sure that the loan works. And my peer, the program we're working with, Cash to Keys, we'll show them we'll give them the contract. They'll review it, make sure the terms are okay. But as long as the numbers work from a debt to income perspective, an LTV perspective, credit score perspective, and there's no other requirements for credit score. We run the findings in our system. We run Fannie, Freddie, and so we do conventional and VA. So whatever you can qualify for, if the house works, we can use this to
conventional and VA.
Conventional and VA.
Okay.
And for VA, I think it's super sexy because in this market, I know, and I think realtors in general would agree, VA offers, for some reason, it's less desirable than conventional. VA and FHA offers tend to be put aside. They look at them as more strict. There are too many hoops to jump through, which is totally false. But this works for VA. I think this gives VA buyers a real leg up.
Yeah. Very interesting.
Yeah.
Okay, so back to
how it
couple
works.
steps back.
Yes.
You're checking to make sure the loan to value. What should the loan to value of this house be?
We can go as low as 3%, which is so if you're a first time home buyer, we can you can put 3% down.
Okay.
That's as low as conventional rules allow, and more than that if you can. Put down more.
And you said you're checking to make sure numbers work for them, meaning that they can afford the monthly payments.
Yeah.
With the interest that's not with hard money or not with cash.
No hard money.
With
whatever the prevailing rates are at the time. Just like a normal pre-approval, normal process, except the other thing that we do is we pre-underwrite the buyer. So in a lot of cases, at least for me, pre-underwriting the buyer gives it an additional level of security. The underwriters have actually seen like a person has looked at the file. It's not just an automatic system. Most lenders will just use an automatic system, which is great. But once you put it in front of an underwriter, a human being who's going to do the analysis and say, okay, yes, this works. That's pre-underwriting. So all those files, all those borrowers get pre-underwritten. So we know that the income, credit, and assets are all there. We know it's going to work, which is why we can waive the mortgage contingency.
Okay. And do they, right before putting the offer in or at the time of putting in the offer, is that where they have to come up with 3% down? Like, how do you guys, because if they're buying this cash, they're taking a huge risk. The capital company is taking a huge risk because they're offering 100% on this property, assuming that and praying that so what's that they're going to get the 3% or whatever.
Yes.
So how do they protect themselves?
Prayer. Believe in me.
What if someone doesn't believe?
It's a good question.
What if someone doesn't believe? And
everyone will believe. There's no choice. Yeah, so it's a good question. So we ask for what I call a security deposit. That security deposit is 2% of the sale price.
Okay.
So in addition to the 3% down, you have to have money for closing costs. So 3% down plus closing costs, plus this 2% security deposit.
Before the offer comes in? Before they put in the offer?
No, not before. No, nothing happens until a contract is signed.
Okay.
Until a contract is signed, once a PNS is signed,
agreement.
we have 48 hours to get the EMD out and this 2% deposit. Now that deposit...
Wait, time out. They're also doing the EMD? Oh, no.
Well, you have to make an earnest money. You have to...
Okay.
You have to also... So we have a minimum requirement for the EMD. It's 1% of the sale price.
Okay.
Which I find in many cases is the minimum that people are using.
Okay.
I've seen people use 2, 3, 4% EMDs. So as long as it's a 1% EMD, that can go to the realtor's office, the normal procedure.
From the buyer.
Right? From the buyer. Goes to the realtor's office, they hold it in escrow. This is after contract. So until you sign a purchase and sale, until an offer gets accepted, we don't have to, no money is exchanged.
Okay.
The same way,
normal way. Yeah.
The same normal way. That 2% deposit is the security blanket, so to speak. And it works in a couple ways. But in terms of the transaction, that 2% goes to the attorney. Doesn't go to the bank. Gets held by the attorney, held in escrow by the closing attorney, and when the loan closes, all that money comes back to the borrower. So that 2% goes into the bank, goes into the attorney's escrow account, holds it there. When we close, they get a credit at closing, whatever against closing costs. Let's say it's a $500,000 house. You put in 2% would be 10 grand. So you give 10 grand to the attorney, they hold it in escrow. That 10 grand will go against your closing costs. So you won't have to bring that 10 grand out of pocket. And anything left over is a check that's returned to you at the closing table. So you put money in as a deposit, gets held by the attorney, not the bank, and then it gets returned to you when we close. Okay. So there's no charge to use the program. You keep all that money. It's like an extra security deposit.
So someone comes to you and they're like, yeah, I want to do this cash deal.
Yeah.
You're checking their numbers. You're also making sure they have the 3% in their bank account.
They have the 3% for the down payment.
And the closing
plus
costs.
Closing costs, plus the 2% deposit. So look at it as 6%, something like that. I mean, closing costs will be more. So having all those, you have to have enough money for all of that stuff.
Okay.
Reserves if needed, depending on the transaction. Usually not with a single family house, but it depends. But that's part of my analysis. Make sure they have enough money to cover it. But there's no fee, there's no hit to the rate. It's just a great program.
How fast do they close?
I was just...
I can read your mind.
I'm like you can see it in my brain. It's like, nah, I have to talk about the closing speed. So the program requires 20 days, 20-day close minimum. But if we need to move fast, we can. That's the general standard is 20-day close.
Okay. Now the scary question. Well, actually, one of the two scary questions.
I think I know what it is. Go.
Inspections.
You can waive the home inspection.
Okay. But do people, can they still, because I mean, within 20 days, goodness, you have your 10 days of doing your inspection, and then you have 10 days to close after that. So you're at the 20 days. Do you wait for the inspection to be good before moving forward? You know what I mean?
I know what you mean. I think with the 20-day close, the timeline is compressed, so you can't wait for one thing to happen to do the next.
Okay.
Once we get the purchase and sale, we do have to order an appraisal.
Okay, that's another thing I was going to ask.
Right. Most of the time, we're going to have to order an appraisal.
How fast can you get them in there? Because
we're going to rush the appraisal.
Okay.
So we're going to get that done quickly. And it's not much of a charge to rush an appraisal. It's like an extra $150, $100, $100 to $200.
Oh my God, if you pay me $150, I will rush anything.
Oh, come on. Okay.
All right. Even like 100, even 100. What do you want?
Yeah, all right.
McDonald's? I'll go run and get it for you.
I don't eat McDonald's. Thank you.
Okay. Oh, you got to try it.
Yeah, the shakes.
Really good.
Shakes are good, man.
Fries
Black and
are
white shake.
amazing over there.
Great
so
fries.
dangerous.
I know. Try to stay away. Black and white shake. Oof. But so the appraisal can be waived. There's two things. Waived? The appraisal can be. In most cases, we're going to have to get an appraisal.
Okay.
But in order for an appraisal to be waived, in general, we have to at least have we have to get a waiver in our automated underwriting system. So lenders have these systems that we use to run the loan through, see if everything works. If we put the address in this system, which we can do, not everybody can, but if you put the address in the system, I can check to see if the system will say, you know what, David, you're putting enough money down, this property has a particular kind of history, we can waive the appraisal. The system will tell me. And it usually requires at least 20% down. Once you're putting more than 20% down, then you get into this appraisal waiver world. These days, waivers are harder to come by, but if we get that waiver initially, we can make the appraisal in the contract for informational purposes only. We still have to order it, but you can put in the contract that you're waiving the obligation to base the price on the appraised value. But it's not common. I think the assumption should be that we have to have an appraisal. There is another level you can take it to if you put a 20% EMD, meaning instead of 3%,
20%.
which is to me is big. But hey, honestly, it's going to the lawyer, right? You love the house, you want the house. It's going to a lawyer in escrow. You're going to buy the house anyway. What's the difference if it's held by a lawyer or held in your bank account? Sounds scary and crazy. You've already waived your mortgage contingency. You're all in. So what's the difference? If we get the waiver in the system and you do that, we can waive the appraisal.
Okay. All right.
Anyway.
Okay.
Appraisal.
I'm a process guy. I love
Yes.
coming up with simplifying complicated things and coming up with solutions. Tell me if I'm wrong, okay? I'm gonna go through the process.
Go.
You tell me if I'm wrong.
Okay.
Maybe some listeners are already thinking the same thing. All right. Purchase and sales agreement gets signed.
Yeah.
Awesome. Let's start the process for the cash
offer.
Cash offer. And at the same time, let's start the conventional process also. But let's rush the heck out of the conventional process. Oh my gosh. Wow, we can get this closed in 20 days with the conventional. Awesome. We don't have to use cash, close it conventional. Everybody's happy. Is that maybe how it happens? If it didn't close if they couldn't get the conventional ready in time, the cash offer does close on the 20th day. Am I giving away too much of the
No, there's nothing to give away.
sauce?
No, there's no secret sauce. I mean, you show your belly, I show my ideas. There's no secrets. We're among friends.
They don't know about that.
Now the world will know. Oh, God. I regret it. Yeah, so our goal is to close a loan. The company is guaranteeing the seller that we'll close on this on a certain day. In terms of the process, the timeline isn't going to change because we have the cash to keys program or we're trying to close a conventional loan. If you don't want to use the cash to keys program, then the timeline really won't change much because you've been pre-underwritten. So the timeline isn't gonna, we can still, if it's not cash to keys, we can still make a 20-day close if you have to. But once you're in contract and you've signed the contract with cash to keys, if you're starting the process that way, we should finish the process that way.
Okay.
Because that's what the seller is expecting.
Okay.
And that's what we've promised. And to be honest, there's no difference. The only in terms of the process for the buyer, except for that deposit that you have to give to the attorney. Maybe I'm not understanding your question. Did I answer your question?
Eventually, this cash deal will need to convert to a conventional.
No. Okay.
What?
So the cash purchase is the guarantee. It's not in other programs that people have out there. The cash entity is buying the house and then you sell it back to the buyer and get a mortgage. We're doing it the opposite way. We're having the cash guarantee so that on June 20th, that's our closing date. If for some reason Johnny and Sally can't get it together, there's a problem with something in their application, we need an extra week, Cash to Keys Private Equity is guaranteeing the purchase on that day. Something happens, Johnny and Sally lose their jobs, Cash to Keys is right there, we're gonna buy that house.
Wow.
That's the guarantee.
And then they get in touch with me to help them sell it?
Absolutely.
Yes! All right, I'm taking down their number. Cash.
Signed up, Kamil signed up.
Keeyy.
Now he's got your back. Keeys.
Okay, got it. I wrote it down. Yeah. Interesting. Okay, that's very cool.
So the goal is we're trying to do two things. We're trying to solve a problem for buyers and we're trying to create something for sellers that's compelling. And I think for sellers, if you see a guaranteed purchase price, right? If you see a guaranteed closing date, and you see a bank account with $90 million in it that this is going to execute, and you see no mortgage contingency, that's a committed buyer.
Oh, yeah.
And we call that a cash deal, because you are going to get anything goes wrong, you are getting a cash purchase from Cash Keys that is contractually obligated.
Okay.
And you as the buyer, we're going to give you a mortgage from Annie Mac.
Okay. From the day that they sign the contract, they start dancing until the 17th day.
Yeah.
Right? Which is when do they sign the disclosures, closing?
Yeah, it all happens like a regular mortgage.
Regular mortgage.
Everything happens like a regular mortgage.
Is listed normal percentage, prevailing?
You mean the rate? Yeah, prevailing rates are Annie Mac super rates. Yeah, there's no charge to the interest rate. There's no requirement for debt to income ratio and LTV. There's no extra points. There's no extra fees. You get all your money back at the closing table.
Wow.
It's clean.
That's so cool.
Yeah.
So closing day, they get the keys and they pay their mortgage to
Annie Mac.
Wow.
We got your back.
Yeah, I got it back. I like
back.
that. For real.
Yeah.
They got our back.
Our backs. All backs.
All back.
Gotten.
All back.
All backs.
The owner is named Allback of Cassidy?
Yeah, Billy Allback.
Billy Allback.
Sorry, guys. Sorry.
So I asked a lot of questions.
Yeah.
And kind of
I love the questions. I love
drilled down to everything.
Do you feel like I answered the questions?
I'm worried that I missed something. Did I miss something?
Okay. I mean, no. I mean, that's the heart and soul of the program. That's the heart and... Well, we also didn't talk about sellers.
Oh, if I'm on the seller side, I'll be like, yes, cash to KEEYS. We'll do that, not KEYS. That's a different company. You know what I'm saying?
I do know. I know.
All right, so sellers, what's up with that? Closing day, they get their money like a normal.
Normal. You get paid.
What were you going to say about the...
So the program that we've been talking about, we call it our cash offer program.
Oh, okay. That's on the buyer's side.
That's on a buyer's
But
side.
how can a seller benefit from using this for themselves?
Exactly. So for sellers, we have a different version of this program. Same concept, but we call it buy now, sell later. Essentially, same process, you get pre-approved. You're going to make a cash offer on your purchase, the house that you're going to live in. In this case, Cash Keys Private Equity will actually buy the house and then sell it back to you.
They'll buy the house they want to buy. The sellers want to buy.
The new house.
That they want to move to.
Right. So when you're a seller and you have a home to sell and you want to buy a house, you have to sell the house you're in, move out of it, and buy the new house and move into it.
Only if the house sells will we buy the new one. That's a contingency.
Typically the contingency.
Yeah.
So in an ideal world, the seller sells and buys on the same day. Simultaneous close.
Yeah, funds go here.
Selling
and there.
this house, buying this house, simultaneous close,
Yeah.
transfer here, money
Miracle
goes from here, money
when
goes
that
from here to there.
happens. Yeah.
Wonderful situation. Sometimes, and I've had this recently happen, you sell, the buyer has a home, situation where they got a place to stay, so they can sell, collect the funds, stay in this temporary location, and then close on the new place. But for a lot of people, you got families, elderly folks, that situation is difficult to find. It's hard to get that. It's hard for people to have that convenience. So how do people sell their home and buy the new home without being homeless in the interim, being stuck? And that's how this program works. Their bridge loans also serve a similar function, but I don't think they answer all the questions. So what this program allows you to do is make a cash offer on your new home with no mortgage contingency and no suitable housing. So you can, with this program, you waive your financing contingency on the purchase, you're making this cash offer, same deal, 20-day close, same terms as a cash offer. No mortgage contingency, no suitable housing contingency, because Annie Mac, Cash Keys Private Equity is guaranteeing the purchase of your departing residence. So we're guaranteeing that we're gonna buy that in 6 months if you can't sell it. That's part of how we cover ourselves, part of the contract. So now the seller can sell their house and not worry about taking a lower offer that might be less money, but they'll work with my suitable housing need and I don't have to have that contingency. So I'm gonna pay for that convenience by accepting a lower offer. And that same seller, if they can't make this cash offer and they have to have this contingency, they got to offer on their new home. Go crazy. How do I compensate for the fact that I have this suitable housing need in my offer to this new place? Well, I'm going to offer $100,000 over asking. Or I'm going to go, what else can I do to compensate for the fact that I have this thing in my offer that is going to generally hold me back?
Yeah.
So having this program, I have no mortgage contingency on the purchase. If I have to go over, I go over, but I don't have to overpay to overcompensate for this thing I have in my requirement that I have. On the sell side, I can take an offer that is more money. I don't have to take an offer based on this suitable housing need.
Yeah.
So I think you can save money on the purchase, you can make more money on the sale, and you have you're much less at the mercy of the market.
That's amazing.
And I think it gives you more peace of mind. Less stress. Okay, I have this program. I know I can do that. I know I can do this. I don't have to worry as much about the timing of everything. I think it just puts your offer is going to get on the top of the stack.
Yeah.
It just is.
Wow. Great program, great setup. Everything is like, it's cool. Cool to have another creative way of putting offers together.
And again, there's no hit to the rate. The rate it's not like we're charging you a higher interest rate. There's a deposit that we talked about before.
Yeah.
There's a similar structure.
Oh,
when
that
you're doing
money's
it from the
going
seller.
back to
The
you
money goes
anyways.
back to you.
Yeah.
Now, if on the sales side, if you're the seller who's doing this transaction and Cash to Keys has to buy your house, they're going to keep 1%. You're going to give them 2%. 2 or 2.5. They're going to keep 1% if they have to buy the house. Okay. So there are some costs. And what I do with my clients is we look at the costs. When you're in the cash offer situation, when you're a buyer, it's really clean and straightforward. There's really very little concern about not making that closing date. When you're on the seller, there are some costs, and we analyze that. We analyze how much am I going to save on the sale and how much am I going to save? How much more am I going to make on the sale? How much am I going to save on the offer?
When they buy the seller's home though, what if they have like 200,000 in equity? They're still buying it at 1%? They're keeping the 1% if they do have to buy it?
If Cash to Keys has to buy the house,
yeah.
then they keep 1%.
And here you go. Here's 200,000 in equity that you had minus the 1% thing.
And you have that equity
Wow.
You have that equity.
Cool. That's awesome. Such a great program. And yeah, I'm glad we talked about it. I'm glad we went back to the seller section too, because that's huge.
I think the seller side is really compelling because I believe that there are a lot of sellers on the sidelines. I mean, you tell me. Realtors go out on pitches with sellers, I want to help you sell your home. What are your concerns? When you're talking to sellers, I think one of the major concerns is how do I sell my house in this market and buy a new house when it's so hard to get my offer accepted? I'm not making enough money on the sale to be all cash to compete. And what do? I got 3 kids, I got a dog, I got school and all this stuff. How do I coordinate this so that I'm not homeless? I think having this tool in the toolbox it's a good tool for a realtor when you're talking to a seller. Say, we have a solution for this.
Wow. Yeah, good stuff. Yeah.
And save you some money, make you more money. When you do the math and you think about it, I mean, the savings, I think, are real, and I think they're realistic, and I think it's compelling.
Definitely. No, thank you very much for coming down today. And,
no, it's great.
Talking about this. This is great.
Can we do another 2-minute round? I like that.
Next time you.
Did you have the questions already lined up?
While I was in the shower today, I thought of a few.
Shower questions. All right. Do you want to go wash your hands and think of some more questions?
No. No, that's why you got to come back. You got to go.
I will. I'll come back.
All right, thank you.
Thank you, Kamil.
Yeah, you're welcome.
Appreciate it.
Do the point at the camera and then